Hey guys, just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Hello everyone. Let's see what we had and what we have now. First of all, the bigger picture hasn't changed, so there isn't much new to say. You can simply check the previous videos for that. We're still trading between the support of the previous range. We also haven't lost the 4-day order block I marked earlier. I just removed the mid and upper lines since we already traded through them. But the low is still on the chart and it hasn't been broken. That means so far there's no acceptance back into the previous range. Wicks are fine as always, and if it does come lower, we have our weekly order block and our monthly statistic levels right there. For now, this level holds. On the daily chart, we can see the upper part of the range acting as resistance. That's why we're trading between these two levels. A break above would be a bullish sign, as long as that range then holds. Simple view, no need to overcomplicate it. I'm still in my longs and not planning to close them since I'm targeting higher, even if we get another sweep of the lows into the weekly OB. Also, our daily cycle level is now slowly climbing. It's no longer at 105K, but almost at 108K. A tap into that is not bearish in an uptrend. Yes, it could tap a few times or grind a bit lower, but in the end, that's a good opportunity rather than panic mode. Of course, it also needs to print a buy signal, so it could dip lower and then print it later. Let's say we do get a bigger move down. I have stats on the low at 98K, which I already shared. Statistically, there's over a 70% chance we don't reach that low at all, almost a 90% chance we don't see a close below, and a 94% chance we make a new all-time high before ever closing below. In the rare cases where it failed, once was during the Corona crash, which ultimately marked the low, and the other was when it made a new all-time high first and then closed below in the bear market. For now, as long as support holds, I don't expect that scenario. My sentiment is not bearish, even though we see targets everywhere down to 90K or 80K, while we're clearly at support. Anything is possible, but statistically, it's unlikely right now. And what I see is people betting 100% on going lower. Well, even a blind chicken finds a grain once in a while. I'd be fine with that. Some of those people were bearish on the move up, bearish again at the lows, didn't expect a new all-time high, and now they're bearish again here. This is exactly how the market works. Time makes people forget their mistakes, and emotions lead them to repeat the same again and again. Then when they're right once, they remember that moment and chase it again in the future, making 5 mistakes just to be right one time. We try to do the opposite. That's why I stick to the plan I made, the same plan I've traded from the start of the bull run multiple times. And so far, it's worked out, against all those emotional random targets. If one day they get their grain and I lose, I'll be fine with that, because next time, I'll just repeat the process. Sorry for the sentiment story, but it's part of the analysis and my observations. Anyway, now let's look at the local picture. I'll mark out the averages as always, and we'll see what levels we have for today, and also quickly recap yesterday. Okay, based on the average gain, we would see another push up into our daily swing high level, which would also test our daily structure. For now, still down. From there, I'd simply look at how the daily candle closes inside this level or not. If yes, that's already a small start toward gaining acceptance back into the low of the previous range. In that case, this level would become our SR level for observation. For the bullish outcome, we'd want to see a retest that holds. For the bearish outcome, we'd want to see it lost, back-tested, and then we'd simply continue ranging between the highs and lows. The average loss level today sits quite a bit inside the Monday range. So while yesterday ended with a daily wick inside, technically that's not full acceptance back inside on the daily time frame. A daily close down there would increase the chance of revisiting the lower part, but for this, we'll need to wait and see. Okay, so let's recap what we had yesterday. First, I was planning along and wanted the level to get tapped before the move up locally. Otherwise, I said it would be more bearish, with the low acting as a target for the short side. And my note was not to trade this level. In the end, we got a bearish 4-hour break and a move down, more or less as expected. I even drew out how the candles might look. But then, just a few minutes before the level was hit, I decided to trade the plan from the morning, even though the conditions were different by that time. That was actually against the rule. What happened next? Price on the 4-hour chart went down, filled my position, and also closed below the support level and below the Monday high. That flipped this support into resistance if not reclaimed. So what I did was close half of the position on the retest of the SR level and left the rest running, either for stop loss or a win. That way, in case it rejected there, I wouldn't take a full loss. For a win, I needed it to reach VWAP to cover the half loss I closed and still make some profit. Then I went to bed, and when I woke up today, I was fully in profit and still in this trade, while of course holding some other trades too. That's the recap of yesterday's trade. So the conclusion, yes, it's a win, but a win against my rule of not trading after a bearish break. That's something I try to avoid long term. Even if this time it's a win and I'm happy, I don't reward myself for breaking my own rule, because in most cases, those rules save me from bad trades. Anyway, it turned out well this time, so it is what it is. The good decision, though, was not to short it. I'm still only longing, and we can clearly see a nice example of shorts being trapped on that bearish break, exactly where they came in. Anyway, happy days with the win. Now let's have a look at the new levels. For today, the plan is simple. No trade for me. First of all, this structure looks ugly. The poor lows, the daily open with just a small move down. Overall, this is nothing I'd want to trade on a backtest. It's more of a target area for shorts. If there will be a short setup, one could look for an SFP or the daily swing high lining up with the average gain. For me, I won't short for now. I'll just observe, especially since later we also have some new data coming in. But yes, price is now coming into daily resistance. If it hits the daily swing high, the invalidation would be a break above. So I try to cover both sides, but in the end, I trade what's good for me, even if both scenarios can play out. I also want to see how the daily closes today, since this level is technically not yet fully formed. A red daily close would simply invalidate this gray box level. With all these poor lows on the way up, I won't trade today unless one of my strategies triggers later. If that happens, I'll update for the Patreons, of course. For now, I'll just manage my trades. I'll take profit from yesterday's trade and wait for New York Open. Then we'll see where we stand, and I'll update again. So, for now, I have no setup I'd take for longs, even though, yes, it's support here. But with too many poor lows and a daily open I don't like, it's not for me. We had this situation last time too, where price just moved below it. So today, I'd rather wait for more price action information before making the next decision. Anyway, the HTF picture is clear. The daily swing high is resistance with this SR level, and it needs to be broken for continuation. On a rejection, the lower part is support, and we want to see it hold. Sweeps are fine. The daily cycle timing is shifting higher, which is usually a good sign. But I won't get bearish if it grinds down a bit there. Simple as that. And for a day trade, I have nothing today. Before I wrap it up, you can join the Patreons if you'd like. There, I make more examples, and soon some educational material is coming out. I think it will be useful if you want to learn more about what I'm doing. With that said, I wish you a good day, and see you in the next one.